Kagiso released their December PMI results a little earlier today and are saying that the index remained in largely positive territory. Here to unpack the numbers with me is Theo Vorster, Specialist Consultant at Kagiso. Theo, thank you so much for joining me today. November reading 52.9, December 51.7. So clearly slightly softer coming to the fore, and looking at your brief here, it's all about the employment index that is impacting the manufacturing sector.
That's the negative side. The
Yeah.
other numbers are mostly positive, specifically if you look at the business conditions, business activity, and new sales orders. New sales orders actually for the fourth month in a row of purchasing commitments are strong, is above 50, which shows you that there is underlying strength coming back into the sector. Yes, you're right. The negative is the employment number. For the 8th month in a row, we have an employment number of below 50, which means that the manufacturing sector is actually not creating jobs. It is actually shedding employment, which is the big negative. And unfortunately, we were hoping that that number would start to turn around, but in effect, December's reading was lower than the reading we had for November. So that's a negative.
Oh, surely we can put it down to the impact of the rand and increase in input costs as well, which is hampering the employment outlook for the manufacturing sector.
Certainly. I also think you need to take into consideration that this reading was taken last week when the rand was probably at its strongest level, which would create a bit of pessimism or negativism, especially in those underlying sectors of the manufacturing sector, which exports. Those exports were hit with this and would obviously play a role in the reading. But having said that, it is the 8th month in a row that we are negative. Now remember, this is a month-on-month survey. So therefore, for 8 months in a row, the reading was worse than the previous month. So for the last 8 months, from an employment point of view, we've been contracting the number of employment opportunities.
So, Theo, what is it going to take to see a big turnaround in the employment picture in manufacturing?
I do think it's down to confidence. Confidence in the fact that the manufacturing sector is on a stable base, and confidence in terms of the manufacturing sector looking forward. Now, if you look at the sub-indicators that read looking forward, they all still positive. Yes, they are lower than the previous month. Expected business conditions, it gives us a reading above 60, which is very positive.
Exactly, it's 60.25. The previous reading was 64.6, and it's been above 60 since October.
Yes.
So, I mean, obviously things are expected to turn upwards quite extensively.
We've been hoping for that, and I do think that more and more of these numbers are showing that we might see a long-term growth in the sector. We need confidence in terms of the sector expanding before you'll see the employment number coming back. And we would hope that we would have seen it by now. Unfortunately, we haven't seen it by now. The one slight caution is that we have a leading indicator, and that leading indicator is used doing a calculation between the expected sales orders and the inventories. Though that leading indicator is showing us a bit caution, it is in effect turned negative, which is not a great number. Having said that, the business activity, the new sales orders, and the purchasing commitments all show that we are still in positive expanding territory.
And when you look at it from a global level, we had strong PMI numbers at the beginning of the year. We had China in positive territory. I mean, down slightly. UK looking very strong, and some really strong data coming through from the European economies as well. So globally, we can comfortably say that manufacturing is starting to recover quite extensively.
Yes, and one would like to see these numbers in the South African number.
Yeah.
Also keep in mind, it was the December reading. December has got holidays.
Yeah.
It's got impacts that you don't have any normal months. Now, although we seasonally adjust these numbers, they can still have a bit of an impact on the number. And our view is that hopefully, if the underlying conditions remain the way they are, hopefully we'll see this reading above 50 continue, and hopefully at some point in time we'll see the employment number picking up as well.
Let's touch on the local currencies. Some of the people we've had on the desk keep alluding to the fact that the South African consumer makes up 60 to 65% of South Africa's GDP, and we should rather focus on the fact that imported inflation with a weaker currency is going to hamper the consumer. And looking at the manufacturing sector, which makes up only around 15% of South Africa's GDP, surely we should favour more of a strong rand to help the consumer. Obviously, there needs to be a balance when it comes to this.
Yes, and I do think that once you start to talk about currency and levels of currencies, there is, first of all, unintended consequences. There are certain sectors that export that's not manufacturing, that will either benefit or not benefit. There is imported inflation. There is the fact that you can now technically import capital goods at good prices to bolster any production capabilities. I think that the debate around the currency is a more difficult debate than everybody assumes. And I do think that there's cognizance of that fact within the government and within the central bank. If you say we need a currency stronger or weaker, The question is how strong or how weak. So you're back in a debate where there's lots of factors and lots of sectors. Yes, for individual companies exporting, it is not good news. But then again, for importing companies, it is good news. I do think it's a debate that's got more angles than purely the manufacturing sector and what percentage that sector is of the South African employment and of the South African
very
exports.
quickly, Theo, what are you expecting for PMI going forward in 2011?
I believe that if you look at 29, the average reading was about 41.8, a lot below the 50. This year, the average reading was closer to 52.4 actually, which is a very positive reading. I believe that during the course of the year, if we don't see any unforeseen circumstances, we will hopefully get readings consistently above 50. And the key is see the employment number coming in at above 50 for the year.